What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is AVCT, American Virtual Cloud Technologies. This finishes at $1.82 today. That is up 35.82%. So we've been discussing this stock a lot lately in the past month and a half. It squeezed 2 times, once back in the beginning of September when the company announced that they were looking to sell off either part or all of their business. So that was really bullish PR. That in turn caused a squeeze. It sold off pretty significantly, and then a few weeks later it squeezed again on more buyout rumors, and then they announced a reverse split, and for the past 2 weeks the stock has been bleeding pretty hard. So up to this point, I've been saying it's never a bad idea to take your profits, because eventually, as with every meme stock and short squeeze, the stocks tend to give all the gains back. So you gotta hit the sell button. Diamond hands is not the way. So I hope Apes took your profits, and if not, that's unfortunate, but everything is a learning lesson, so next time you'll be better prepared. So it's been pretty rough for the stock, and we're now in uncharted territory, but now appears to be a good time to start buying the dip and loading up, which we'll get to in a second here. So no company-specific news to justify this price action today, just the overall markets absolutely moving today. So a lot of buying pressure and a lot of shorts getting squeezed out here. This was number 9 on StockTwits today, had over 2,200 mentions, so once again we're going to analyze it. And today's TA is going to be more or less the same from yesterday's, just with the updated price action. All right, let's go ahead. Let's jump right in and analyze here. So first of all, we have a cup and handle in the making. The bottom of the cup appears to be 121. The all-time low, and there can be multiple possible tops. It can be $2.50, $3, $4.50, $4.70, $5.65, $6.30, or $7.80. And longer term, this is part of an even bigger cup and handle where this has the potential to come all the way back up to the high of 47. Although I do believe the most realistic tops would be $2.50 or $3. But that's a bullish indicator that is telling us that the stock should come back up to one of those tops to complete the cup. We also have an inverse head and shoulders forming back at around 250. Was when the first shoulder formed. The head has just formed at 120, so all that's needed is the second shoulder to form, and from there the stock should break out to the upside. So the inverse head and shoulders is currently a bullish indicator. And then we have a triple gap down. It was actually quadruple, but one gap got filled today. The first gap is back at 215, so that's a bullish indicator that is telling us that the stock should come back up to 215 to fill this gap. The second gap down was back at 395. So another bullish indicator that is telling us that the stock should come back up to 395 to fill this gap. And the third gap down was back at 850. So another bullish indicator that is telling us that the stock should come back up to 850 to fill this gap. The first 2 gaps should fill in the short term, and the third gap will probably fill in the longer term. The RSI, the relative strength index, is currently at 40, so not quite overbought, so not quite oversold and undervalued, but definitely below average there. So the RSI is currently a bullish indicator that is telling us that the current price of 182 should be higher. And here we had a descending channel forming where the upper channel was around 130 and the lower channel was around 70 cents. So if this broke 130 to the upside, that'd be bullish. And if this broke 70 cents to the downside, that'd be bearish. This did in fact break 130 to the upside. So the descending channel was and currently is a bullish indicator. Here on the MACD, the moving average convergence divergence, the MACD line is below the signal line and is pulling away. So that's a bearish indicator that is telling us that it may be time to sell. And in the aftermarket here, this is pulling back to 170. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 180, which it finished around today. So if this goes to the upside, next levels of resistance would be 195, 205, 210, 225, 240, 250, 260, 275, 285, $3, 310, 330, 345, 355, 375, 395, and then 410. There is resistance above 410, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 175 and then the low of 121. 121 is the all-time low, so no support below that. So right now with the current price, 182, the channels to the upside are pretty decently sized, so expect a regular amount of price action if the stock continues to run to the upside. But to the downside, if/when this breaks 175, the channels start to open up and get pretty wide. So expect a significant increase in price action if/when this breaks 175 to the downside. And this did 16.5 million in volume today. Very significant volume, way above the average of 1.2 million. So this pump slash squeeze today was confirmed by the volume. Okay, guys, just my opinion, not financial advice. So if you guys watched yesterday's show, I did say that it's been really rough for the stock lately, but now would be the time to load up and start buying the dip because the chart is starting to look very bullish in the short and long terms. Again, we have way more bullish indicators than bearish indicators right now. We have bullish indicators in the cup and handle, inverse head and shoulders, triple gap down, RSI, and descending channel. And again, we have 2 bearish indicators in the MACD and aftermarket action. And today, the stock moons 36%. So my stance on the stock is the same, but the entry isn't as good now. So therefore, if you want to go long, not financial advice, you missed a really good entry down near the low at 120, but even after a 35% gain today, the current price of 182 is still a pretty good entry. Not exactly an excellent entry, but definitely above average. Again, a lot of bullish indicators, not many bearish indicators, near the all-time low, below average RSI. Again, in the short term, this may come back up to 395 to fill the gap there, and from the current price of 182, that would be about a 120% upside potential. So massive upside potential here in the short term, and this really shouldn't go too much further to the downside. It was just at the all-time low. So let's just say this may come back down to 121, the all-time low. And from the current price of 182, that would be about a 35% downside potential. So I would say going long at the current price, 182 would be a high risk, very high reward play. Definitely worth a shot in my opinion, especially if you're willing to buy and hold this for the long term. It's just a bit risky, again, because there are wide channels to the downside, so this can easily come back down to the all-time low. But as long as you're willing to buy and hold, this should pay off pretty big in the longer term. So I can support going long at the current price 182, and if it pulls back, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, I would not do that, and I would not recommend that. You should have went short anywhere in the $6 range, all the way down to the $2 range, and here at 182, it's a bit too late to go short. You missed your chance, and going short now would probably result in you getting burned. For all the same reasons that going long is a good play right now, going short is a pretty bad play. Again, a lot more bullish indicators and bearish indicators, low RSI, near the all-time low. Again, in the short term, this may come back up to 395 to fill the gap there, which would be about a 120% upside potential. And again, in the short term, this may come back down to 121, the all-time low, which would be about a 35% downside potential. So I would say going short at the current price, 182, would be a very high risk, high reward play. Not worth it in my opinion. There is a decent amount of downside potential, but just way too much upside risk for my liking. So if you want to go short, please do that at your own risk, and it would definitely have to be for a quick scalp. Get in, get your money, get out. So I don't like the current entry, 182, on the short side, but I will say, if/when this does come back up to 395 to fill the gap there, then I think that would be an excellent entry to start shorting this down. It may be a little bit before we see $4 again though, but I sure hope so for the apes. So in summary guys, the stock has been getting beat down for the past few weeks, but now would be a good time to load up and buy the dip. As a wise man once said, buy the effing dip. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is AVCT, American Virtual Cloud Technologies. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.